If you have $1,000 sitting in a bank account right now, congratulations, you're already ahead of most people. But here's the problem. That money is losing value every single day. Inflation is quietly eating it while it just sits there doing nothing. In this video, I'm going to show you exactly how to invest $1,000 in 2026, step by step, even if you've never invested a single dollar in your life. No confusing jargon, no fluff, just a clear, simple plan you can start this week. Stay until the end because I'm going to show you exactly what to click, where to go, and how to set this up in under 30 minutes. Before we talk about where to put your $1,000, we need to do a quick three-point check. Because investing without this foundation is like building a house on sand. Checkpoint 1. Do you have high-interest debt? I'm talking credit card debt at 18, 20, even 25% interest. If yes, pay that off first. Here's why. No investment in the world consistently returns 20% per year. The stock market averages about 10% historically. So if you're paying 20% interest on debt, paying it off is your best investment. Full stop. Checkpoint 2. Do you have an emergency fund? Before you invest a single dollar, you should have at least $500 to $1,000 in a separate savings account for emergencies. Because if your car breaks down next month and you have no savings, you'll be forced to sell your investments at the worst possible time. Checkpoint 3. Is this money you won't need for at least 3 years? Investing is not a get-rich-quick scheme. This $1,000 needs to sit and grow. If you might need it in 6 months for rent or a vacation, it doesn't belong in the stock market yet. If you checked all 3 boxes, great. Let's invest this money. Part 2. Where not to put your $1,000. Real quick, let's talk about where not to put your $1,000. Because most beginner investors lose money not because markets crashed, but because they started in the wrong place. Mistake 1. Individual stocks. I know it's tempting. You hear someone made 300% on Tesla or Nvidia and you want in. But picking individual stocks with only $1,000 is extremely risky. One bad earnings report and you could lose 30% overnight. We're not doing that. Mistake 2. Crypto. Bitcoin, Ethereum, Solana. I'm not saying they're bad forever, but they are not a foundation for a beginner investor. We want boring, consistent, proven growth, not 80% drops in 6 months. Mistake 3. A regular savings account. The average savings account in America pays 0.5% interest. Inflation runs at 3 to 4%. That means every year your money sits in a regular savings account, you are losing purchasing power. Your $1,000 today buys less next year. Mistake 4. Hot stock tips from social media. TikTok finance influencers, Reddit threads, Discord servers. Avoid all of it for now. Most people giving free stock tips online have no idea what they're talking about. Or worse, they already bought the stock and want you to pump the price up. Now that we know what not to do, let's talk about exactly where your $1,000 should go. Part 3. The 3 best options in 2026. There are 3 solid options for your $1,000 in 2026. I'll walk you through all 3, then tell you which one I'd personally recommend for most beginners. Option A is the best choice for most people under 50, and that is a Roth IRA invested in an index fund. Let me break both of those terms down. A Roth IRA is a retirement account that lets your money grow completely tax-free. You put in money that's already been taxed, and you never pay taxes on the growth or withdrawals in retirement. It is one of the most powerful tools the U.S. government offers regular people, and most people never use it. You can open one for free at Fidelity, Vanguard, or Charles Schwab. It takes about 10 minutes online, no minimum deposit, no monthly fees. Now, inside that Roth IRA, you're going to buy an index fund, specifically something like VOO or FXAIX. Both track the S&P 500, which is the 500 biggest companies in America. Apple, Microsoft, Amazon, Google, Nvidia. You're buying a tiny piece of all of them at once. Historically, the S&P 500 has returned about 10% per year on average. That means your $1,000, with no additional contributions, could grow to over $17,000 in 30 years. And if you add just $100 a month on top of that, you're looking at over $200,000. That is the power of compound interest. And the Roth IRA means you pay zero taxes on any of that growth. This is option A. And for most people watching this is the move. Option B, high-yield savings account. Option B is for people who aren't sure about their timeline yet or who still need to build that emergency fund. A high-yield savings account, or HYSA, is just like a regular savings account except it pays dramatically more interest. Right now in 2026, top HYSAs are paying around 4 to 5% APY. That's 10 times more than a regular bank. Your money is FDIC insured, meaning it's completely safe up to $250,000. You can withdraw anytime, and it's earning real interest while you figure out your next move. This isn't a long-term wealth builder, but it's a smart place to park money you're not ready to invest yet. Option C, the split strategy. Option C is what I call the split strategy, and it's great if you want to do a little bit of everything. Here's how it works. $500 goes into your Roth IRA, invested in VOO. This is your long-term wealth builder. $300 goes into a high-yield savings account. This becomes your mini emergency fund. And $200, if you want, goes into one individual stock of a company you genuinely understand and believe in long-term. This is your learning money. You'll make mistakes with it. That's fine. The split strategy gives you growth, safety, and a little excitement without putting all your eggs in one basket. Part 4, Step-by-Step Action Plan. Okay, here is your exact action plan. Do these 5 steps this week. Step 1. Check your debt and emergency fund situation. Takes 10 minutes. Just look at what you owe and what you have saved. Step 2. Go to fidelity.com. Click Open an Account. Choose Roth IRA. Fill in your basic info. Name, address, social security number. It's free and takes about 10 minutes. Step 3. Transfer your $1,000 from your bank account into your new Roth IRA. It usually takes 1 to 3 business days to clear. Step 4. Once the money clears, search the ticker VOO in the search bar. Click Buy, enter $1,000, confirm. That's it. You are now an investor. Step 5, and this is the most important one. Set up automatic investing. Go to your account settings and set up $50 or $100 per month to automatically invest into VOO. Then forget about it. Don't check it every day. Don't panic when it drops. Just let it grow. That is the entire strategy, 5 steps, under 30 minutes of your time. Part 5, Why Starting Now? Matters. I want to leave you with one final thought, because this is the thing that most people don't fully grasp until it's too late. Time is the most valuable ingredient in investing. Not how much money you have, not how smart you are. Time. Here's a real example. Person A starts investing $200 a month at age 25 and stops at 35. Just 10 years of investing. Person B starts investing $200 a month at age 35 and invests all the way until age 65. That's 30 years of investing. Who ends up with more money at 65? Person A. The person who invested for only 10 years, but started earlier, ends up with more money than the person who invested for 30 years, but started late. That is how powerful compound interest is. And that is why the best time to start is right now. Not next month, not when you have more money, right now. Your $1,000 today is worth far more than $5,000 5 years from now. So let's recap real quick. Before investing, kill high-interest debt and build a small emergency fund. Then open a free Roth IRA at Fidelity. Buy VOO with your $1,000, set up automatic monthly investing, and leave it alone. That is it. That is the whole strategy. Simple, boring, and proven. If you found this helpful, the next video you should watch is Roth IRA Explained. I break down everything you need to know in under 10 minutes. It's right there on screen now. And if you want the free beginner investing checklist I mentioned, the link is in the description below. See you in the next one.